To that consumer spending report we were telling you about, purchases rose last month, the most since October. But could higher food and energy prices derail the improvement? Joining us now, Julia Coronado, the chief economist for North America at BNP Paribas. Julia, welcome to Bloomberg's Bottom Line. Always good to have you on.
Thank you very much.
Julia, talk to us about that number that you saw today. Were you surprised by that?
No, we were looking for that number actually, but it is true that most of that spending was inflation. So a lot of the higher spending came from higher food and energy prices. Real spending only rose 0.25%, which is pretty subdued.
Julia, then talk to us about where the consumer is right now. If we can't talk about the psychology of spending, is the consumer now getting comfortable enough to spend, even though we are still not in the throes of a full-fledged economic recovery?
Well, what I would characterize it as is we had a decent holiday shopping season. Consumers were offered a lot of discounts. They came out early. They spent at a pretty good clip. They bought some cars. So that was the fourth quarter, very decent quarter for consumer spending. The first quarter is shaping up much softer. So even if we get a decent number in March, we're looking at maybe a 1.5% to 2% pace of consumer spending growth. So really roughly half the pace that we saw in Q4. And most of that is coming from the tax that is represented by higher food and energy prices. So consumers, it's not completely derailing consumers, but it's already taking a healthy bite out of spending.
Julia, is it correct then, as a lot of people are saying, that if you're looking at the higher spending for food and energy, people paying more at the pump, is that in effect a tax on consumers?
Absolutely, because right now those higher prices aren't coming because wages are rising. It's really being generated more by external forces outside of the U.S. So for the U.S. consumer, their wage growth is very subdued. The job picture is improving a little, but it's still a tough road. And so on balance, the consumer's purchasing power hasn't gotten better, but they are paying higher prices. So it's definitely a tax for most U.S. consumers.
And the report also showing that inflation picked up, albeit moderately. Should consumers be worried about that going forward?
Well, consumers are more focused on headline inflation, of course. They see the higher prices they're paying to fill their tank and to fill their grocery basket. The core prices tell us more about longer-term trends. And again, because there's this disconnect between higher food and energy prices and wages, we see that in core inflation. Core inflation is very subdued. It's hard for companies to pass on, say, higher input costs into the prices of other goods and services that consumers pay for because they just don't have the wherewithal to pay those higher prices. So that really limits the extent to which those other prices can rise.
Julia, sometimes it's a little bit of a paradox here, because we did see that consumer spending is rising, but we still see that unemployment where it is. Millions of Americans are out of work, and that doesn't even count the underemployment figure, which is in the double digits. And for minorities, particularly African Americans, the number is staggering. So where is this consumer spending coming from?
Well, again, this is coming from the, say, 80 to 90% of consumers that do have jobs and do have income to spend. It is still, it's important that we do characterize this as a very subdued recovery by historical standards. If you look at the saving rate, for example, in today's report, it's still very close to 6%. That's a lot higher than it used to be. So it is still the case that most consumers in one way or another are still affected, either through a spouse or a sibling or a friend, somebody who's still struggling, looking for work. So consumers on balance remain very cautious, still saving a lot. Still very price conscious. They put in a good holiday season. Now they're taking a breather, grappling with higher prices. So it's still definitely a subpar recovery in that sense.
Julia, when's the housing market going to join this recovery?
Oh, goodness sakes. That's another hard question. The housing market certainly hasn't been looking very good. The spring season has actually brought on a glut of supply. Some of these foreclosed properties and people who have been holding their homes off the market. But demand really hasn't improved. I think there's been a paradigm shift for households in terms of their taste for home ownership. And, we still have a lot of excess overhang of supply that needs to be absorbed. So we've actually started to see prices fall again at the national level, which is a little bit disturbing.
Julia, in our last 30 seconds, on Friday, the March jobs report, what are you expecting?
I think that should be a very decent number. We've seen some good momentum in hiring. We've seen a lot of the indicators looking much better there. So we're looking for a 180K on total non-farm payrolls. Again, relative to the kinds of numbers we used to see in recoveries, that's not fantastic. But remember, we're still dealing with the headwinds of state and local governments laying off workers, the construction sector really not participating in the recovery. So a 180K is, I think, a very solid report, and important that we see that momentum continuing so that consumers can weather this inflation shock and keep going.
Julia Coronado of BNP Paribas joining us from here in New York. Julia, always a pleasure. Thanks so much.
My pleasure.